All right, we are back. Real Migos back again. Good to see you. We got a special guest today. One of my favorite people, Jeff McRoy. Do I ever say your name right? I can never say McElroy.
Not yet, but that was close. McElroy.
McElroy. Damn, dude, I've always butchered your last name.
You know what? I've said McElroy, so I'm with you.
McElroy works. That's the other pronunciation.
Okay.
Well, it's spelled McEl. Anyway, we're back. Real Migos. Jeff is here. Jeff's an agent in Austin as well. Good friend of ours. He's with Real Broker, and he does a lot of really, really good, interesting stuff that not a lot of agents do. Does a lot of infield stuff, commercial. And so we're happy to have him. We're going to talk about investing, where to be investing, all that good stuff. We're going to talk about property taxes, obviously, because property taxes are such a major thing right now. We're going to go through that. The CPI report just came out. You have interest rates or rates went up a quarter point last week by the Fed. We got people that are angry at the Fed for raising rates because of the CPI report. So we're going to go through that. Jeff, good to see you, man.
Yeah, thanks, Jeremy. Hey, Ian, how's it going?
Oh, it's great, man. Let's dig into it.
Ian, I love the shirt, by the way. You got to explain to people the shirt.
Okay. For those of you who aren't in Texas, Bucky is like, I'm not going to say he's like a deity, right? But everyone appreciates Bucky, the gas stations, bathrooms. It became a whole thing. Like you drive by a Bucky's and you're like, what is that? And you see this giant building. It calls your name and you're like, let me go check it out. There's rows and rows and rows of gas stations. You go inside. There's all of the brisket and the kolaches and merchandise and just everything you could ask for in a gas station, and the cleanest restrooms this side of Texas.
Nice.
I had to think about it. I was like,
in Texas, not on the side of Texas.
Or something. Yeah.
Nice. All right. So let's dive into the property tax issue situation here in Texas. So we talked about property tax a little bit. I made a video. I've put some stuff on my YouTube, my website, but I'm having a lot of people still ask me about this, and I'm going through the process. I'm protesting one of my properties myself. The other properties we're leaving for protest companies because I'm not able to pull comps on those. They're kind of outside my purview. So one thing I noticed when I did mine, and Jeff and I were talking about this pre-show. So they ask you to give all the evidence, right? So they're supposed to give you an evidence packet. They give us the evidence packet. We sent back like a full list of all the reasons why we didn't agree with those values. And a lot of it, and Jeff and I were talking, they were using comps from June when there's comps from December that are literally 30% less. Right. And then for me, they were using comps not in the same neighborhood, and their justification for using the comps that were not in the same neighborhood. Now, mind you, we're talking about a neighborhood that has a pool, has a gated community, and was already a much higher entry fee than this neighborhood we purchased in that has none of those things. And so they're trying to pull comps from there, and the justifications is in the same school district. Well, if that's a justification, Jeff, I should be able to use comps from the cheapest neighborhood possible in the same school district, right?
Well, you would think so. You know, what I found is I took a slightly different approach, because when you file your protest, they want you to tell your story, but I just use one comp because they don't give you the comps that they use until your protest is already filed. So today I filed yesterday, and this morning I got the evidence pack, and that's exactly what I found. They used comps from July and August, which would have been listings at the absolute peak of the market. Then they had a couple other comps that were lower in December, and another one that was even lower yet that closed in the 1st of January, which to me is really a reflection of the December market value.
Right.
And it's also not very clear how you do the informal protest, because I had numerous people who had said they had asked for a protest. Actually, I was talking to somebody today last year. They got this notice in the mail, and they got this that said, hey, you missed the protest, so you lost your chance to appeal. And it's, I'm working on a video for that, but essentially you're going through, like, you're filing your claim again, and then there's a button that says get in line.
Yeah.
After you get your evidence and your comps, then you get in line, and you literally hop right into a negotiation with the county at that moment.
Well, so what they did with mine is they sent me, we uploaded all that information, and then they sent me, so the value they gave me on the house was 588. Dude, if they want to buy it for 588, the city can more than buy it for that. I will 1031 and find something else. The value in that neighborhood right now, there's 4 homes on the market that have been on the market since January and December for 439, 440, 425. They've been sitting on the market that are good comps that have been sitting, haven't sold. And these are nice homes. It's not in a bad area. So that shows you, I mean, that's a huge disparity from 588 to 430, right? So when they did that, though, that says you can approve or disapprove. But if you click the disapprove button and I don't agree with that price, you've missed your informal hearing, even though I asked for an informal hearing. In there, I asked for a video conference. Well, that actually, if you do that, now my only remedy is to go to the formal hearing. So the difference, and Jeff and I were talking about this earlier, the informal hearing is like Jeff and I talking about this. Jeff's a tax person. And I go, Jeff, hey, here's the deal. I think, here's why I refute all these comps. I showed you the comps today, and then I can show them what the market did, right? And then potentially get a lower valuation. Yet what they want you to do is to go to the formal hearing. You will actually lose that probably 10 times out of 10, probably 9.999 times out of 10, because basically it's a firing squad. You have 3 people that have no idea what they're doing, and they listen to the tax person. The tax person goes, nope, nope, nope. I lost when I did it that way, and I scored big on the informal. So they want you to go to the formal hearing. If you click that button, you're going to the formal hearing. You're done.
Right. What I found last year when I did that is really quick. We're prepared to offer you a discount of X, and this is all verbally. I said, well, that sounds pretty good, but which comps did you use? And I said, could you use another comp? Could you use another comp? And they said, well, we'll make you one final offer. And she says, and I said, what if I don't accept this? He goes, then you'll go to the formal hearing. I said, could you put it in writing and then put it in the system? And so I believe that they are coached and trained to do that 2-step process just to settle the deal so they don't have to do the formal hearing. But they're in a way forcing you to say no, which then you run the risk of not showing up for the hearing, and then they end up winning the protest. I coached a couple of my clients on that last year, and one in particular, I said, you need to make sure that your protest has data to back it up, because if you go to the appraisal hearing with the emotion of you increased my taxes by 32%, they don't care. You need to show them actual comps. And when he went to the hearing, they gave him a value that was actually higher than what they offered him over the telephone.
Yep, 100%.
So
100%. Ian, you're doing this right now. You had some info you want to talk about too.
Of course, I have info I want to talk about. I didn't have any info I want to talk about. I was hit with my rental as well, and we have not submitted it because I'm sitting here thinking, I don't know. I'm looking at the comps. I think it's worth it, and I'm afraid that they're going to get me. I don't really have proof that it's not worth it. That's the problem. That's the real problem. And there are a lot of people that are in that situation where they think that they're going to win because the property appraised value went up. But it's like, no. Your house is worth way more than you paid, depending on when you last protest or when you purchased.
Yeah. See, our personal property, they praised it kind of like on the money. But again, this is Hayes County versus Travis County. And so I'm hiring a company to do that because I have comps that would help. But I don't want to go through the headache of doing all 3 properties. My biggest challenge is that when we bought our current property, they had an over 65 exemption that pulled off, and then we put the homestead on, which is tough. The value didn't really go up, but now the taxes are probably going to go up $6,000 to $8,000. It's pretty substantial. So I have a company protesting that one. What companies, Jeff and Ian, what companies do you recommend if somebody's going to do that? I have some on my website, but what have you used or had clients use? Jeff, go ahead.
Okay. I had a client, thanks to Drew Teller. He went around and looked at about 20 of them for me, and he came up with a company called Ownwell, which is somehow affiliated with TurboTax, I believe. They had no upfront fees and 25% of the savings. And so that's who he went with. I did just a look through the website. and it looks to be a reputable company. So it's ownwell.com. And so I've referred a couple of people to them today.
Okay. All right. I've had several people send me that one. I haven't used them. I've used Five Stone Tax and Texas Pro Tax. I didn't have the best scenario with Texas Pro Tax. I don't really think they did anything, but it could have just been that year. I mean, it could have been several reasons, but Ian, who else have you used?
I forget who we used last year, but this year we've got, we interviewed them on a podcast. They were called protestingpropertytaxes.com. That was their website. I forget their business name.
Okay.
But I've had mixed reviews from people that have used them over the last year.
Okay.
Some people were just saying, oh, well, they couldn't do anything for us, or they didn't handle the jurisdiction, which was interesting. Right. But I think similarly to most of these companies, they'll take their profit from what they save you.
Right.
Have you ever seen where they don't do that? Like where they charge you a fee up front?
There was one firm, and I can't recall the name, that just charged a fee up front and a share, which I thought was kind of interesting. I think, when somebody's complaining, you got to also kind of measure that out. What are they complaining about? Did they get a savings, or did they actually deserve a savings? Because the tax assessment might have been right.
Right. So, Five Stone Tax, I believe they had it was a tiered system. It was, I think, $75, and then they took 45%, and the other was $149, but they would take 40%. Maybe I'm wrong on those numbers. You have to look, but it was an upfront fee to process it. So yeah. So good luck for everyone trying to protest their valuations. Ruben says, I used Five Stone last year and they weren't successful at all. Still got charged $150. Yeah. So that's one way, so Ownwell was the other company that Jeff recommended. Maybe look into them to see if they might be a better fit for you this year. Good luck though. But just keep in mind, if you click that don't accept valuation, you're going to have to go to the formal, what Jeff said. And what, after talking with the tax consultant, when we called in, if you go to the, there's a queue you can go into, informal queue, but you have to find the button on there, and then you literally right away go straight in. So if you're going to click that button, make sure you have your stuff ready to go to protest. And on top of that, there's another, if you go through it, there should be another link where you go through, or email where you submit all of your valuations and everything ahead of time. So you may have to do both of those things in conjunction. So good luck. 45%. Ouch. Yeah. Better than nothing, I guess. So, I mean, if they save you $1,000, you got to pay them 500 basically. So, let's talk about this CPI report that just came out. So last week we saw a quarter point go up, and now the CPI number came out, which was the lowest, in 40 years? Is that what it said? 12 years, 10 years, something like that. Here we go. It's consumer price in April showed inflation pressures remain elevated in the U.S. economy, while headline prices rose and slightly in annual. So we saw that inflation came down slightly. Lawrence Yun, which I'll pull up an article shortly, Lawrence Yun is arguing with the Fed for continuing to, he's an economist for NAR, but basically he called them out for raising the Fed funds rate, even though we were looking at having a decrease in inflation, and inflation's coming down, because that will continue to hurt and suppress buyers. It will hurt, the market. Obviously, we're seeing a lot in commercial, which we're going to talk about here in a minute with Jeff. But a lot of that is potentially going to hurt the market. But this report, we had the market rebound. And on top of that, if you go look over, and this is where people get really confused on what happens with interest rates. If we're looking at the 10-year treasury, which is what really home mortgage rates follow, is this 10-year treasury. 10-year treasury went down today from 3.52 to 3.43. So I would look to see the overall 30-year fixed drop tomorrow. And as it dropped today from 6.65 to 6.57, but I would imagine after a few days, this will bounce probably back up. What are your thoughts on all of this, Jeff?
Well, it's just a crazy ride, and it's really unpredictable. And I'm not following the logic of the CPI going down. I think that's positive, but rates staying up is keeping people out of the market, and it's keeping new money from coming into the market. And I don't see how that's healthy for anybody. We have a lot of uncertainty with buyers and a lot of uncertainty with sellers. And I think that's what's causing what I consider almost a stalemate in the market.
Dinosaur D says, remember, people, keep your protests mostly peaceful but fiery, right? Fiery but peaceful. Jedi says, up, up, down, down, left, right, select, start to actually protest. Appraisals is pretty funny.
I love that cheat code.
So anyway, back to the CPI numbers. I mean, Ian, overall, what are your thoughts when you're seeing the CPI, and rates come down to or not rates, but inflation back down to 4.95%.
So I always want to follow what my clients in the moment are hearing and how they're reacting to it, because a lot of people aren't paying close attention to the changes, or they like. I'll give you an example. I've got a client that they're ready to go out this Friday. It doesn't matter what is happening. They know that it's going to, or they hope that it's going to drop a little bit, but they're not eyeing it on a day-to-day basis. And so I don't know how many people it's affecting that are actively in need of purchasing homes. So the question is, who is this really affecting right now, other than us realtors getting excited about it? Right?
Well, and one positive thing to think about for just, I mean, obviously we're in the spring market, but one thing to think about, and I'll pull up this in a moment, but the MBA, which is a mortgage broker association, came out and said that last week we were up 5% for new purchase applications and up 10% for refi applications. So it shows you that there's still demand out there. That's week over week. It's up 5%. Year over year, it was down probably still significantly from last year. Obviously, we have a lot less buyers in the pool. But overall, we have more buyers in the pool. Jeff, when you're looking at it right now, what are your clients looking at? And are they paying attention to this? Like Ian's clients, what are your thoughts?
Well, I don't think my clients aren't paying attention to the CPI. What they're paying attention to is what's their lender telling them for their mortgage rates right now. And really my buyers are focusing on how can I get a concession to lower my rate?
Right.
So if you're looking at resale versus used, had a buyer who just put a home under contract in Santa Rita Ranch.
Yep.
We compared to two homes, exact same price. One of them with a $13,500 concession to buy down the rate with the builder. The resale home, to be equivalent, needed to drop the price by $60,000. It was a no-brainer to buy the new construction home. Another buyer, same thing. Get the rate concession, the deal works because now they've increased their purchasing power. Then you go to the seller who says, well, I don't want to offer that. Let's make them ask. And you look through the data in a given neighborhood, you'll find that 50 to 70% have on average about an $8,000 concession. So people aren't advertising it, but that's what it's taking to get the deals done. So they're not focusing on the macro national news. They're focusing on what does it take to get the deal done right now? Because on the houses that are in good condition, there's still multiple offers and the price is going up, but they still need these concessions. So it's really tricky to get these deals done.
So these homes that have the concessions, these are inventory though, right?
Well, yeah, these are inventory homes, correct?
Yeah.
Right.
So I'm in a situation right now where I've got some clients that are, they started building, I want to say in January, and they were told that they wouldn't be finished until October. And now the builder's like, you know what? We've had plenty of time to get this done. We're closing in June. It's like, whoa. And so now they've had to worry about mid-July. So now they've had to worry about like, when do they lock in their rate? And that is when they start paying closer attention, asking the questions about, okay, what's the best time so that I don't have a spike in my interest rate?
Yeah. Go ahead.
And on the investor side, they're still pretty much absent from the market. If they're looking for a property that has to have income to justify a loan, it's just not happening because they're still in the sevens, a real high origination cost. And then with property taxes high, properties simply don't cash flow unless you're at 40 to 50% down. Your cost of money, your return on your money is less than you're going to get on a certificate of deposit. So a lot of investors are sitting out unless they're paying cash and they're buying at a really deep discount.
Well, and if you think about the market this year compared to last year, I want to talk about that, but I also want to go back to the builders and what I did a video about builders. But if you're looking at that, if you look at the market last year, we saw all these investors trying to get in before rates went up. And what was it? There was different opinions of how many investors were purchasing, but it was like 28 to 30% of the purchasers last year and in 2021 were actually investors in our market. A lot of them have disappeared. Now look at the buyer demand, right? It's a third really of where it was. So if you imagine, if you add back in that 30%, we're still down 1/3 from where we would have been. So while you have a lot of these channels out there saying, oh, the market's crashing, and Patrick McDavid said that the market's the lowest it's been. Well, what he was referring to is that the sales have been the lowest, but overall nationally, inventory is down across the board nationally. There's a few places up where it's up. One of them is here in Austin. And so that's where, if you're a buyer, and this is where builders in this video that I just did the builders are having fun right now, because the reality is builders can compete. Just like Jeff said, they can give 13,500 in concessions. They can buy down your rate to 4.9%. And then when you're looking at some of the resale in that same neighborhood, you're going, well, okay, just like Jeff said, $60,000 higher, or 60,000 same price, but I'm getting $13,000 in concessions, and I don't have to. It's less I have to come up with, and I'm getting a better rate. Where over here, $60,000, it doesn't make sense. And so that's where the market, if you're getting ready to sell in a neighborhood, and Ian, you've seen my videos, you've been along for the ride. I always told people, be very careful about buying a new construction neighborhood when you have really high property taxes in that neighborhood, and they're going to be building forever, because the builder does become your competition at a certain point. Now, I have a listing in this same area that we're talking about in the Liberty Hill area. It's the Georgetown side of Liberty Hill, and we're under contract. And when I spoke with them, I gave them a price that was $15,000 below really where they wanted to be. I said, the reason why is because our competition is builders. We need to buffer in that 15 grand, because that's what the builders are offering. And we went and looked at all the incentives the builders were giving. So we priced it correctly, 15,000 below, multiple offers.
Right.
So, and we got exactly what they wanted. They're super happy. So it's something to think about in this market. We have a lot less demand, just like Jeff said, because investors are out of the market, and overall buyers are skittish. They're hearing all of these channels talk about the market crashing, but we crashed last year. Let's be honest. We crashed last year. Now you're seeing the fluttering of the market.
I was really interested last year when we were dealing with a lot of the investors being capped out, right? Like the percentage of investors per neighborhood being capped out, and thinking, and there was always the question of, well, why would the builder do that? Why would the builder do that? And now we we had our theories why, right? But now it's coming back full circle. It's like, imagine if the builders would have given neighborhoods, like half of a neighborhood, to investors, and then we're turning around in this situation where the investors are backing out, selling, or doing what they're doing. That would have hurt a lot more.
Yeah, you're fair point. I'll pull up this in a moment, but if you think about it, if we pull the numbers right now, which I can do, I would say 45 to 50% of the inventory in the market's vacant.
Oh yeah. Yeah,
very much so.
So, if buyers are looking at the market right now and they're concerned, Jeff, what advice would you give buyers that are price sensitive, right? Let's focus on price sensitive, right? So price sensitive being those people that maybe don't have 20% down, maybe need some concessions, maybe need to be under a specific price, because let's be realistic, affordability is a major issue here in the Austin area. What advice are you giving most of your clients right now? And then we'll kick it to you, Ian.
Well, I think the simple piece of it is, I'm always getting my clients pre-qualified with a local lender, one that can actually sit down with them. That's number one. But the message isn't that timing the market. It's like, when you see the house that you want, you need to buy it, because the variance at that $400,000 range in price, it's not that much. You're not going to win, but you're not going to win by that much. And so the key, if they need to have those concessions, you want to look at FHA loans, I think is a good solution. They're going to get protection on the appraisal, but then the key that I've always found is good collaboration with the listing agent, and the communication that the offer is not going to look like a 2021 offer. We're going to ask them to pay for expenses. We're going to ask them to pay for the buy down. And you're trying to get a feel of whether that listing agent has the ability to effectively explain that to their client. Now, the trick is, because there really isn't very much inventory out there, is the homes that are really great, there's multiple offers, so you lose that leverage. So it's really not a buyer's market if the home is in good condition and priced right. You got to compete for that offer. So everything needs to be really clean. You don't want to ask for them to do repairs in the contract. You want to keep the concession request within reason, so they don't see a risk of it under appraising and then having to lower the price and give a big concession. You want to look at quick closes if possible. But the most important thing is not to delay. Don't think about it. Don't come and do second showings. Put together a clean offer and just make it happen.
Dude, I looked up the numbers. Sorry, I was like, so 60%. When we're talking only single family, not condos or anything else, 60% are vacant.
Yeah.
Wow. That's insane.
That's a lot.
And I've seen a lot of those vacant homes, and a lot of them are not in very good shape.
Mm-hmm.
So condition really, really matters. I do a pretty thorough walkthrough because I've done it for a lot of professional investors. So we eliminate a lot of houses really quick. And with buyers, that's another part too, is getting them to eliminate those low cost options. So if their budget's $425, let's stop looking at the 375s, because you know what you're going to get. You're going to get cracks in the foundation. You're going to get a bunch of repairs. If you're limited on cash to close, you're not going to have money to put in new windows or a new floor after you close.
Well, unless you negotiate it, and then they're going to want the higher price point anyway. And then
it just doesn't work. So a lot of it is also excluding the garbage and going after for exactly what they can qualify for.
To answer your question, what advice would I give buyers? I would actually start looking at homes that are occupied, specifically that are occupied. And the reason why is because in a lot of situations, they can't make their move until they've sold this house. And so they might be a little more apt to work with you. If somebody's able to have a house sitting vacant for 4 or 5 months and not budge on the price, that's a more difficult tactic to take, I think.
I'm trying to find the comment on my channel that somebody wrote, and it was, I forget what video it was on, but they basically said, yeah, we've been waiting for the market to drop 2 years to write an offer. And I specifically remember, and then why I'm bringing this up is what Jeff said. Jeff said, he said, if you find the house that fits you, that fits what you're looking for, jump on it. I remember I was laughed at the end of 2021 when I was telling everybody to buy homes. I'm like, you got to buy now, buy now, buy now. Interest rates are low. The market's slow right now because it's the winter time. Buy now. And everybody said, oh, here you go. Here's a realtor just trying to sell homes. Yet had this person in this comment thread, we went back and forth a little bit, not arguing, just I was trying to get more info from her. But if you compare the numbers to what she would have paid for a little bit higher of a home back then with the interest rate versus what she's trying to get a home at now with the current interest rate, she still saved a bunch of money buying in 2021, and she would have bought it before prices really went up. And so she really would have been even, in fact, in a much better situation. So I'm not saying that that's going to happen this year, but we have Aaron in the comments talking about how he thinks, and I do agree with him that we may see more reductions towards the winter. And this is common for seasonality, right? You see prices up in the right now, May, June, and then they start dropping down July, August, really the June numbers. So everything's a month behind, right? So the May numbers that hit out in June, you're looking at a month really back in sales. It doesn't really reflect what's going on in a contract today. So, June, July, August, September, if you're starting to see that property that really lights up what you're wanting to do, and maybe you can get some concessions, then maybe we do see more inventory. But what I wanted to show about the inventory is that I did a 7-day average showing what was happening, and I got laughed at. Some guy really he watched Reventure too much, but I wanted to show this because I think people need to understand, we're getting all the data that we get is lagging data. It's not actually current data. So here's actual current data right now. So right now, active homes, we have 1,300 homes that hit in the last 7 days. And we have about the same amount, a little less, that have gone under contract. But if we look at the amount that have withdrawn, expired, and are on hold, we still have more that have gone under contract than have hit the market. The one thing that's interesting, look at this, and I want to get your guys' thoughts on this, is price decreases are still around, if I did the math on this, would probably be around 20%. Is that what you're seeing still? Or any thoughts on that?
Yeah, it's interesting that there's more price decreases than new active listings.
Exactly.
Yeah.
Oh, wow.
So there's 1,469 price decreases. Now we have to be careful when we look at these numbers, because this is not the MSA. This number is not in the MSA. This is how many are in our MLS.
Right.
So 1,400 out of what's totally on the market is 14%. So 14% are price drops right now. But one thing I want to note is when we search and do this, if I look, so that was 10,000. If I go by counties, which this is where they pulled the MSA, and I do Williamson County, I do Hayes County, Travis County, is it Comal or Caldwell? It's Caldwell. Caldwell, it's Bastrop, and what am I missing? That's all of them. If we look at that now, 8,500 homes on the market. So, that's 2,000, almost 2,000 home difference. So if you think about it, 1,400 homes, and this is when we look at this, 1,400 homes doesn't really reflect our actual market area, because it'll be stuff that's like further down towards, other areas. It'll be stuff that'll pull from San Antonio and stuff is what I'm trying.
But I'd still check the single family box, just because that's right.
But I can't do price. The way they do this, you can't look at price decreases at that.
Got it.
Yeah. Okay. So anyway, there we go on that. So let's talk about what we actually wanted to come here and talk about, and that's investing. Now, right now, Jeff has done we all work with investors here. Jeff works with some unique investors doing different infill deals and has done some other stuff. So Jeff, investors that are looking right now, maybe looking commercial or anything, what are they actually looking at?
Well, I think that's maybe I'll kind of frame the question a little bit differently. Sure. I'm working with some clients in the multifamily space. So doing some research. Well, I'll start with the infill. What you talked about there is, okay. I was starting to get a.
Why don't you before you do that, explain what infill is?
Okay, infill is the development of the inside of the city, or more accurately, the redevelopment of the city. If you're from Austin or you're not from Austin, there's a lot of properties where you'll see a house be torn down, and then you'll see two houses built on there, or a duplex developed on there, and they're usually urban, more expensive properties. Or you'll see a corner torn down, and you'll see condos go up, or apartments. So infill is essentially the redevelopment of the inner core of the city. And so in that particular space, last June, the builders knew that they were in trouble. They were trying to finish their projects, and the new construction more or less just halted. And then the next thing that happened is people stopped buying development lots and starting new construction projects. So I had a client as an example with a lot that had comps at $1 million in Crestview, where now that property's worth maybe $750, right? Yeah. And builders, even if it was a good deal, weren't buying these lots because it was too risky to start a new project before they sold their existing project. And we're still going through that process. So we have a real lack of people buying the older homes that need rehab. Most of them have been rentals. Some of them are estates. Some of them are people that are moving into assisted care, moving in with family. But these are homes, the big areas in the center of the city are going to be, Crestview, Brentwood, 78704, parts of 78745, East Austin. And so that market just stopped. And with the rates going up and the taxes on those properties being really high, investors stopped buying those to hold as rentals for future infill development plays. So that market just went away. So that was real tricky. But what I saw was investors buying a lot of land right on the edges of the city. So if you think of outside the infill areas, just right around 183, Del Valley, Caldwell County, Dale, Texas, Jarrell, Hutto, raw land was just trading like crazy and prices were really escalating, and they still are. So with this multifamily client looking through the opportunity in multifamily, you can imagine all of these spots that would be the logical place for the next single family residential development to be are all being developed into or approved. I looked just in the last 3 months, 16 multifamily projects were approved by the city of Austin to be built. And these are all like surrounding the city. I looked for this particular client, what projects are on post bid, meaning they're going to be delivered in the next 12 to 18 months. There was $7.8 billion worth of multifamily between Austin and San Antonio that was going to be built. And that doesn't, so it's so the reason why that's important to call it your everyday investor is that now the next logical ring for a single family residential community are all being developed by multifamily. So
Right.
Where are the next single family homes going to be that are close to the city? In the inside of the city, there's no new construction. So
Yep.
What's going to be left? The resale houses. So I believe what you're going to see in 2025 is a severe shortage of urban new construction and a shortage of lots to develop new construction. So an escalation of homes right there in the urban core. Then you're also going to see on the outside of the city, areas like Dale and Caldwell County, Jarrell, Elgin, Giddings, Hutto, those areas just exploding because those are going to be the only places where you're going to be able to develop new homes that are in the affordable range.
And what that means, if I'm hearing you correctly, is that if you're an investor looking at buying and holding closer to town means that we're not going to see, while people are thinking about crashing, right? If you're looking at that, you're going to see more towards the center of Austin, continue to see healthy prices because all of the building is on the periphery.
Right. So inside the city, eventually I think we're going to see a little bit of relief on the interest rates, but not a lot. So an investor, the typical investor you get from out of state, I want to buy this property, this fourplex, this duplex, but I want it to cash flow. If you did the pure exercise, it was about 40% to 45% down when interest rates were low to buy that deal. Well, now they're going to need to put at least that amount of equity in and then put a good cash reserve to wait 2 to 3 years for that property to cash flow. But where I think the real magic is if you're buying a lot that has the potential for redevelopment, you have multiple exit strategies. You hold it as a rental, or maybe you turn that property into a new build or sell it to a developer that does a new build.
Yeah.
But the short story is within the city, the prices will go up because there's going to be a shortage of housing, and the housing that's going to be built is going to be in the periphery. The affordable houses, I think are going to be on the east side, and neighborhoods that are going to replace, where somebody would have gone to Circle C, they're going to go out to Dripping Springs, they're going to go to Belterra, they're going to be out in Bee Caves. On the north side, they're going to be out in Liberty Hill. We're already seeing the start of that. And anybody who needs to be or wants to be close to the city, the prices have nowhere to go but up. But it's going to take about a year for that to happen, or to start.
One thing that I have a question about, though, is you're talking. So over the last few months, there's a lot of reports about how Austin is like the number one for multifamily. That's building the most units multifamily, and that's true. I mean, you stated the facts right there. One thing that's in this kind of lack of better words, shitstorm with the banks and commercial lending is that the fact that with a lot of these developers are building these projects, right? So they go through, they get their construction loan. At the end of the construction loan, they got to refi out of that construction loan, right?
Right.
So they get to that end of that construction loan. If rates don't come down in the next really couple months, you're going to see a lot of these projects that are going to run into issues because they're going to have to refi out, and those rates might not be affordable. What are your thoughts on that?
Well, I think the banks are going to work with them. They're going to do workouts. They're going to do interest only loans. They're going to do whatever they can to not put the developer into default. Now, you consider that any one of these loans, there's always going to be somebody that comes in and kisses the note, right? And that guy is going to be, probably a family history, building multifamily that extends generations, really deep pockets. And most of these developers are pretty big companies. So they're going to find a way to work out the loans with the bank. The banks aren't going to, I don't think the banks are going to collapse those deals right at the time when they need to put them in a place where they can start earning the income that they planned on.
Right.
I could be wrong there. I think there is going to be a developer, probably call one, that's building, under 100 units that may have graduated from infill projects and is now trying to build something bigger, that finds that they're a little bit over their head. They don't have the depth of experience with the banks to be able to be fronted, 30, 40, 50 million on a project. But, that's just a little bit of speculation of what the bank would do. I just don't see banks calling notes on the multifamily project. I just don't see that happening.
And I mean, the other thing is you have a lot of these commercial buildings being built too. I mean, you have, what was it? Remember that building that was supposed to be the tallest in Austin? It was like 80 stories is now 50 stories? Like got cut in half pretty much. Do you think part of that it has to do with the current climate, or was that more to do with like the city? I don't think it was the city, but that's interesting to see.
You think it was funding? Is that what you're saying?
I don't know that it was funding. It was supposed to be 80 stories. It was this big, all these articles, and then the redevelopment came in at like 50 stories. So that's what I mean.
So like they had a budget, and then they found out, in order to finish the project, it's going to be X amount, and they said, well, we're just going to cut it in half then.
Yeah,
I think the decrease. I mean, the hardest hit space in commercial is office. Right. More people are working from home, so companies don't need as much office space. We're seeing some news of some layoffs throughout Austin. I think you probably have better data on that than I do. But the fact is people are working from home. They don't need to come in the office. So why build a giant tower when you don't need to?
I think that's a poll question. How many people are working for companies where they still allow you to work 100% remote in Austin, Austin-based company? Because I'll tell you what, the traffic has tripled.
Here's an interesting stat for everybody here. So I kept saying, get out of here. Okay, go back. I kept saying that we got to keep an eye on the unemployment rate, right? Because the unemployment rate was hovering around 3.2 for a while. It popped up in February, and now it's coming back down. And that probably has to do with the CPI and the jobs report too. But so Austin's kind of rebounding when it comes to jobs there. One of the things that I said is a lot of these people that are getting laid off tech are just rolling over to find one of those open jobs that's been sitting out there. So I'm curious to see what people say on that. Yeah. One other thing I want to bring up, and I talked about this on my video from Tuesday, or today's Wednesday, yesterday, was the fact that a lot of these developers, and it's kind of in the same realm what we're talking about with multifamily, they're building like these 70, 100, 150 unit neighborhoods. Elon Musk has one going on right now, but they're doing them where they build a neighborhood for rent. So basically what they do is just build the whole neighborhood, get it all rented out, and then now they got their income. What do you think that'll do for our market here? Because there's several. I mean, the Austin Business Journal just announced another one. I think there's like at least 6 or 7 projects I've seen in the Austin area that are built to rent, not built to own.
Well, I think that's also right in that ring, because most of those are right on the edge of the city. I mean, you're familiar down by Goodnight Ranch, the Urbana project. That was sold at like a 3.5 cap rate, I believe was the story went, right before the boom, and everybody thought they were crazy, but they made a killing on that. So I have some friends who are developers who have built those type of communities. I think you're going to see those increase, and where they're currently being built right now are right in that ring. So single family homes are going to have to go farther away than where the build for rent are. Also seeing, in fact, I was just having a conversation with a mortgage lender who's also a developer. He's putting together a community where they're going to do leases. So let's say they have a 30-year mortgage that can be financed with FHA, VA. The land lease, let's say it's a 30-year FHA mortgage, land lease of 35 years, and they can get the property financed. So stick-built home on leased land, just another creative way to make a nicer home more affordable for people. So I think we're going to see more creativity like that. Which seems crazy, but there's so much of this going on that I don't see how it's going to stop. It's trying to think of the right words to describe it without using profanity, but there's a lot of this happening that's really going to push people that want homes, farther out of the city or
so the cause and effect, right? So the city is really pushing this building developers to build and develop affordable housing, right? So if you're a developer and the city is going to offset and give you money or subsidize part of your project, and if you're going to give away, 10% or whatever to affordable housing, then you're going to go build more multifamily because you're incentivized to build multifamily versus building neighborhoods to own, right?
Right.
Yeah,
that's correct.
Yeah. Oh, Stefan's on, man. You're jumping in 48 minutes late, Stefan. What's up, man? Steven, sorry. I like that.
Do we have an easy way in LoopNet to get the office vacancy rates?
You can pull it out. You're not going to get it out of LoopNet. You're going to get it out of CoStar. I suppose I could try to look it up and
pull it up.
If you pull up CoStar and then hit at the bottom share screen, you can go through the tabs to pull up and show CoStar. I've been looking to buy an office space because I have a 1031 that's up it's up the 27th. I have to name properties by the 27th. And I've looked at everything residential. I can't find anything. So I'm looking at potentially buying an office space for myself that we can convert into a brokerage space with our brokerage. So that's something that we're looking at. And there's not a lot. I mean, it's interesting that there's not a lot for sale. For leasing, yes, but for sale, there's not. I mean, it's probably a good time to finally find a lease, I guess, then, or wait a couple more months and find a good lease downtown.
If I can find.
It looks like it's just above 5%, which seems low.
Yeah, that feels low. I was going to say 8 to 9%. Let me see if I can.
Ian will need office space to store the business expense shoe collection. That's smart. I like that.
Marketing.
It's a good move for you. It's a warehouse space. What you need. Yes. Yeah. You don't sell anything out of the warehouse. I have a client right now that
we sell these Buc-ee's shirts.
So I was talking with Jeff earlier about a commercial property I'm working with right now. It's commercial right now is so difficult doing commercial because there's just so many extra hoops you're running through right now. But I have another client that's looking at buying. She's got a 1031, about $2.5 million on 1031. And so what we're doing is we're looking at vacant lots that we can half ag, half put like a barn dominium or commercial spot on there. And then she'll have income on one side and ag exempt the other. So there's stuff out there, but man, land is not cheap right now. It's still not cheap. Steven says, my mom works for Orange County government and she proposed a partnership where the county donates the land to get affordable homes, which they have defined as $430K price point. Speaking of Orange County, in LA, I'll have to pull this up on the Real Deal, but I don't know if you guys saw that there's a luxury. So there's already a transfer tax on properties. It's like, I think 4 or 5% transfer tax. So if you're selling a home, it's, like a multi-million-dollar home, you're talking $40,000 to $70,000 transfer tax. But now there's an additional tax in LA, and anything over 5 million, you have 4% tax that goes back to the city to help with the homeless problem. And then if it's over 10 million, it's a 5 or 5.5%. So I was talking to Christoph Chu, who's in Beverly Hills, who's a very prominent agent out there. I was talking to him today, FaceTime, and he was telling me that, because I said, hey, is this Real Deal article correct? The number of 5 million plus sales has plummeted. Normally they'd see about 100 in a month, 5+ million homes. They saw 5 because of the tax. Isn't that wild? So cause and effect, like that is not helpful. Like I see where they would try to get that tax, but he's like, there's already taxes in place for that. So they're talking about they want to raise $1 billion. $1 billion could eradicate the homeless problem, but is it actually going to fix the problem? So interesting stuff happening over in LA. Good thing we're not there. You find it, Jeff?
Yeah, no, they changed their the tabs, and I'm not finding what I'm looking for.
Gotcha. We're running close to the end here. So any other questions y'all have as far as like buying, whatever, just whatever questions, start dropping them in. Steven says, I wonder if Stefan, I'm going to start calling Steven Stefan. Wonder if something like that can entice the builders so they're just focused on build to rent asset class and such. That's exactly what that does, right? So if you're going back to the, what I think we was talking about is incentivizing with partnerships with the county for affordable properties. That's exactly what it does, is it moves those people into purchasing build to rent. Mark K says there was something similar in the Bay Area where mandatory affordable house requirements have tanked the building in San Jose. I hope they don't. Here's the problem is anytime they do anything like that in California, Texas, specifically Austin, tries to institute the same thing. So hopefully we don't do that. Southwest is 20% vacancy rate. That's pretty big. Yeah, that's Southwest.
But the domain is the lowest. Everybody's moving to the domain from downtown.
Looks like the domain's 11% vacancy and downtown is 16%.
Yeah, I got this. Let me show you this crazy stat of what CoStar's forecast is for Austin office vacancy. Check this out. This is off a report.
So if you do the share screen tab at the bottom and then hit that tab, it'll do it.
Yeah, okay.
While we're waiting, y'all saw the lithium plant going in Corpus from Elon?
Yeah, that's been on the books for a little bit though.
Yeah, but now it's like announced. There was a whole live days ago.
My buddy Matt's doing it. If you're into Tesla, my buddy Matt's doing an event. I'll find it here in a second. I believe it's the 16th. They're doing a big cyber event. So let's see, or a Tesla event. Did
Not
you
the
share?
16th of May.
Yeah, that's not what I wanted to share here.
Okay. Well, your screen's up, so make sure you're careful what tabs you got open. You know, the saucy tabs.
I don't got any of those open, so we're all good.
Okay, good.
Close them all. Windows D.
And thank you, by the way, Jeff. Jeff's down in San Antonio at a marketing event, network event for agents. So he joining us from there. So there's a cyber roundup May 16th. Doors open 2 p.m. Live streams at 3 at the Luster Pearl off at 94 Rainy Street. Yeah, 94 Rainy. Luster, so Tesla Owners Club of Austin presents 2023 annual shareholders after party. So Matt does a lot of stuff with Tesla. He's the president there. So if you want to see that,
yes, I'm gonna have to go to that. You want to go?
I plan on going. Yeah, let's coordinate that. It's the 16th. I don't have anything on my calendar.
Oh, I'm gonna be in Atlanta. Yeah.
Oh, boo.
Yeah.
Man, I didn't have the heart. They called me Monday. They called me Monday and asked me to go talk in Atlanta. And then Misha called me. He's like, dude, they asked me to talk. I'm so excited. I didn't have the heart to tell them that I had just turned it down.
Yeah, they asked you first.
He's like, dude, they just called me. I'm so excited.
What
tips do you have?
What if he's watching?
Misha's not watching this. Steven says, saw an ABJ TikTok is also backing out of their office footprint. Yep.
That's interesting.
Interesting to see how continued headwinds affect Austin unemployment and also housing. I mean, I don't think a lot of those TikTok people are here. I mean, if you think about it, even like Twitter, I think he's talking about Twitter. Is it Twitter? No, Twitter. I mean, what did Elon laid off like 80% of his staff? It's crazy.
Yep.
Yeah. Did you find it yet? Less equity rich tech folks buying 900K homes in Central Austin. True. It's amazing to me. I mean, if you look at like, if we were to pull up right now and look at 78704, 78704, one of my favorite zip codes. I'll pull it up right now and show it to you. It's amazing to me. If you look at this, what the prices of homes have done in this area right now, you have, I mean, there's quite a bit listed there, but you're talking just to get into Zilker for a 4-bedroom, 1,800 square foot. I think I'm going to go buy
That's actually
one.
pretty good.
Yeah.
Considering
1.1 million. Yeah, let's see if this is actually.
Oh yeah, but that's not like a tear down and complete rebuild like a lot of them are.
Yeah, 1.1
Well,
million.
it's kind of in the middle,
days.
right? You know, because
Yeah, and isn't it?
it's not a tear down, but it's also not equivalent to the other homes in Zilker.
Well,
Yeah.
and it's occupied.
It's
it goes back to that whole.
It's kind of a tweener, right?
Yeah, look at this one on Goodrich,
tweener?
1.49. I'm gonna have to send this
Jeff,
one.
did you just say a tweener?
Yeah,
in between.
In between a tear down and a.
Is that a colloquialism? Do I need to learn that?
No, you don't need to learn it. Just use it.
Okay. Run around calling things tweeners.
Yeah, be careful with that.
Okay.
Yeah. Yeah, in today's climate, you got to be careful everything you say. But I mean, look, Bolden Creek. I mean,
Yeah.
3.2 million for
that's 6.6 though.
Dude, this
5,000
Monroe
square feet.
Street. There's some really great stuff on Monroe right here. I actually did a few videos on Monroe. There's some really.
That doesn't
cool
back
stuff
up.
There's some really great houses in that neighborhood that just aren't selling.
Yeah,
You know, at the 2 million plus range. I mean, and they're beautiful houses. They're well done, and they're just not selling.
Ramita. I did a video about this one right here. In fact, man, it's changed. It's relisted with somebody else. Interesting. 3.3. Interesting. Or maybe that was one next to it.
3.4 and it's vacant.
Is that the one with the cool rooftop deck?
They all have rooftop decks.
Yeah,
I did a video on, I think 904, the one next to it.
Yeah.
So that's the question right there. So this is another poll question. Is a 1,100 a square foot a good price for y'all in Austin?
Yeah, maybe.
I think you know the answer to that.
I know, but I want to hear people say it.
Yeah.
You're just trying to make people mad.
Also, just keep in mind, and I mention this probably every podcast episode, that this is an election year and that's going to affect our numbers again. Generally, it drops.
Next year's the election year.
Next year, well,
they're
starting to campaign and everything,
Yeah.
right? I guess next year is
Interesting.
going to hit harder.
Yeah, I should put a poll question. What do you think? Who are you voting for? There you go. Put that.
No, don't do that.
That'd be great. All right. Well, I want to thank everybody for joining us today. We are at our hour. We used to do these things for 3 hours. I don't have the energy for it anymore. But Jeff, thanks for the time, man. If you want to reach out, Jeff's on Instagram at @TheRealJeff. Say your last name. McElroy. At ianofAustin. I'm at Real Jeremy Knight. So appreciate y'all. We'll catch you on the next stream. Peace.